Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Cosmo Films Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Bhavya Shah. Thank you, and over to you, sir.
Thank you, Rutuja. Good afternoon, everyone. On behalf of Essential Technologies, I welcome you all to Cosmo Films Limited Q3 FY 2022 earnings conference call. From the management, we have CEO Mr. Pankaj Poddar and CFO Mr. Neeraj Jain. I request you all to refer to the investor presentation which is uploaded on the website, which can throw much more light. Starting off with the statutory declaration, certain statements in the conference call may be forward-looking. These statements are based on management current expectations and are subject to uncertainties and changes in circumstances. These statements are not guarantees of future events. Now may I request Mr. Neeraj Jain to take us through his opening remarks, subsequent to which we can open up the floor for the Q&A. Thank you, and over to you, Neeraj Jain.
Well, thank you, Bhavya. Very good afternoon, ladies and gentlemen. I'm Neeraj Jain, CFO at Cosmo Films, and joined by my colleague, Mr. Pankaj Poddar, Group CEO at Cosmo Films. Our financial results for the December 21 quarter and investors presentation are already available on company's website. So we will start the call with a brief on the performance of the company for the quarter, which may be followed by the questions. December 21 quarter, company has posted record consolidated quarterly EBITDA of 161 crore rupees. This is as against 152 crore rupee in previous quarter and 112 crore rupee last year similar quarter. With this quarter result, company has posted uptick performance continuously in a row from last 12 quarters now. In fact, this is the first quarter when the company has posted more than 100 crore rupees quarterly PAT. In fact, the PAT was 104 crore rupees for the quarter. Consolidated sales for the quarter is 771 crores, which is higher by 35% compared to December 20 quarter. Couple of factors behind this. One is the higher specialty sales, which has been growing more than 20% year on year for us. Higher overall volume by 4%, increased margins, and the raw material price increase, which got passed on to the customers. EBITDA has increased to 161 crores during the quarter, which is 44% higher compared to December 20 quarter. The enhanced performance is on the back of again couple of quarters, higher specialty sales, better operating margins. In fact, the BOPP margins has been running close to 42 rupees per kg during December 21 quarter, compared to 40 rupee in December 21 quarter and 30 rupee per kg in December 20 quarter. Higher volume by 4% and uptick performance by the subsidiaries taken together. 29 crore rupee EBITDA has been posted by the all subsidiaries during December 21 quarter. The corresponding figure in last year similar quarter was 11 crore rupees. Subsidiaries performance is better due to higher sales, specialty films growth, and better margins. So to sum up, higher EBITDA is because of higher specialty, higher overall volume, better BOPP film margin, and uptick performance by subsidiaries. Now, enhanced EBITDA together with lower finance cost and lower effective tax rate led to increase in PAT by 65%. If you do recall, increase in EBITDA is 44%, against which PAT increase is 65%. Increase in EPS is 75%, which is higher than even the PAT increase due to impact of buyback of shares in December 2020. Now on a trailing 12 months basis, EPS stands at 203 rupee per share compared to 127 rupee per share at the end of the FY21. Based on trailing 12 months basis again, now the ROCE of the company stand at 28% and return on equity at 37%, which in fact is one of the best in the industry. The Board of Directors has declared second interim dividend of 10 rupee per equity share for the FY22, together with the first interim dividend of rupees 25 per share. Now total dividend for FY22 stand at 35 rupee per equity share compared to 25 rupee during FY21. Moving to balance sheet side, the net debt to EBITDA now stand at 0.6 times and net debt to equity at 0.3 times, which reaffirms the strong financials of the company. The company is looking at for about 200 crores of capex during next 6 to 9 months, and which will be largely on specialized BOPET line, value-add capex to further enhance our specialty films, and on sustainability and specialty chemical division. The financials are expected to remain strong even with this capex, considering robust cash generation happening. The bottom line impact of this capex will start from FY23, although full year impact will not be there in FY23, but will be partial impact and full year will be in 24. During the quarter, the company has received sanction under PLI scheme for production of specialty film for use in electronic products. The incentive under the scheme will be for 5 years on 100% production of new plant. In phase 1, the company is planning to put 1,200 metric ton annual capacity with capex of about 32 crore rupees. The capex is expected to generate 2 times to 2.5 times of asset turnover ratio. The company has published its first report on sustainability and ESG initiatives on its website. You are requested to refer the same. In fact, the company is working on a sustainability plan for the coming years, which shall further enhance and create favorable environmental impact besides cost optimization. Details of the plan will be announced very soon. I think these are the updates on the quarterly results. Now moving to specialty sales update. Specialty sales growth has been happening close to 20% year on year from last 3 years. In fact, YTD December 21 specialty has grown more than 20% and that too on a much wider base. The company is in process of ordering several other value-add assets for further growth in the specialty sales. And we are looking for 80% volume run rate target from this specialty from the end of FY23. Moving to growth projects. In coming years, I think very clearly B2B segment and B2C segment will drive the growth. When we say B2B segment here, we are referring a specialized BOPET line, which is expected to commence operation in Q2 of FY23. And the BOPP line, the world's largest BOPP line in fact, which we recently ordered. In B2C segment, pet care and specific specialty textile chemicals will drive the growth. Specialized BOPET line commissioning may start from Q2 of FY23. The line will add close to 20% capacity. The company is targeting complementary growth in the specialized BOPET line, which is shrink label and other high-end specialty. Will partially substitute imports and is an excellent opportunity to convert non-recyclable PVC film market of about 30,000 metric tons in India. The company has placed order for the new BOPP line, which will be, as I said, world's largest production capability line. And it will increase the production capability of the company by close to 1/3. The line is expected to commence operation from FY25. Both the new capacity plant, means specialized BOPET line and BOPP line, this will allow the company to further expand its specialty sales in coming quarters and coming years. The pilot launch of our pet care division under brand name Ziggly has delivered much better than forecasted results. Now the company is looking forward to rolling out its digital-first omni-channel business model. In December 21, the company has launched its pet care division under the brand name Ziggly, with first store opening in south of Delhi. In fact, parallel to this, we have also rolled out mobile van service in NCR and launch of e-commerce platform. The company is now planning to expand Ziggly's presence both in the digital and offline model over the coming quarters, which will obviously include the experience centers, the stores, the vans, etc. Now moving to textile chemicals. Textile chemicals business, which is started in the Q2 of FY22, has taken off very well. Within the first 3 months, the company has commercialized 40 plus products and has started supplying to more than 40 customers. The company continues to conduct extensive trials with the customers and expect to further add more products in the coming months. I think these were the updates for the quarter. Now we would like to open the call for the questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nirav Jimudia from Anvil Research. Please go ahead.
Good afternoon, sir.
Good afternoon.
I have 2 questions. So, in the initial remarks, what you mentioned that our subsidiaries have been showing very healthy growth quarter on quarter, every quarter from last 3-4 quarters probably. So, like from Q3 onwards, we have seen every quarter showing good numbers. So, even if we compare FY21 numbers with Q3 numbers, like entire FY22 EBITDA is reported in Q3 of FY22. So what has actually changed in last 4-5 quarters where our EBITDA in absolute amount in percentage terms have been moving higher? So are there new products which we have introduced there, or have we done some cost rationalization there, or are we supplying the products here from India, keeping India as a manufacturing base? So what has actually changed from FY21 till 9 months, which has really helped to show this improved performance? Thank you. This is first question, sir.
So we have been winning a lot of new businesses in the subsidiaries, and majority of the new businesses that we are winning are of specialty where the margins are much better.
Okay.
And in general, we have also been able to keep our price tables at quite a strong level in these subsidiaries.
Okay. Okay. And sir, in terms of capacity utilization, do we have some leeway from the current levels, where we can further improve our sales or improve our utilization, or are we planning some capacity expansions there to fund the future growth?
So we are fully utilized. In quarter 3, we had a planned shutdown during Diwali for the annual maintenance. So we do see some upswing in the volumes in quarter 4, but that will be hardly 3 to 5% of our total volumes. The growth now will come from the polyester line, which will come in the quarter 2 of next financial year, and then the new BOPP line that we've announced.
Correct.
The volume growth will, or let's say the business growth will also come from the Cosmo specialty chemical, where quarter on quarter we are seeing growth in the numbers, and the adhesive business is also expected to start post the necessary government approvals in this quarter itself.
Okay. Sir, on the second question, what in the initial remarks you mentioned that we have done, or we will be doing a capex of 200 crores for next 6 to 8 months, where some of the capex would be for that specialty BOPET line. But also you mentioned that some of the capex would be going for expanding our specialty BOPP capacity. So how much of those capex would be for taking our sales from 62% to 80% for the specialty BOPP capacities? And if you can also help us understanding that which category of specialty films would help us to take this turnover specialty from 62% to 80%.
Yeah, so majority of the capex that has to happen is in specialty polyester.
Okay.
As far as specialty BOPP is concerned, there is not as much capex happening other than building some new barrier options for our customers.
Okay.
The growth is likely to happen in multiple segments of the company, whether it is a specialty packaging where our focus is on heat resistant and barrier films, which help in being far more recyclable and sustainable for our customers.
Okay.
The growth is also happening on specialty label films. It is happening on synthetic paper. It is happening on high-end films in the lamination segment, and it is also happening on the industrial films. So I will say that all our specialties in 5 segments continue to grow for us, and we see that all the work that we have done in last several years continue to pay rich dividend to Cosmo.
Okay, sir. So thank you for answering the questions in detail. I'll join back in the queue if any, sir.
Thank you.
Thank you. Next question is from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Good afternoon and congrats on great numbers. I wanted to ask the question about your debt levels, and congratulations on the upgrade of rating also. In the slide you've given how in September 18 it was 759 crores in terms of net debt, and it's come down all the way down to 455. Do you feel that the company has moved to the level where the debt levels will keep coming lower because the EBITDA has become, the capex is becoming more self-sustaining with the cash flows? And what would your financial policy be given the fact that ratings have gone into the high safety category? Thank you.
You see, as you rightly said, net debt has come down significantly. The latest number is close to 350 crore rupees is the net debt of the company. We do believe that the Cosmo will definitely remain focused on the growth. So some capex will keep on happening. While we do not believe that we will be debt free immediately, but yes, cash generation is happening very fast. So to sum up for you, while some debt level will remain in the company, but the financial are expected to be very robust.
If I can just extend the question, if there's a good opportunity to expand capacity, what is the maximum, let's say, net debt to EBITDA that you would go to in the future? And, so that you can keep a rating also high.
You see, so far we have announced 2 large capex, specialized BOPET line and BOPP line. Considering these 2 capex, and some capex will happen in the 100% subsidiary on the CSC side. So considering these capex, we expect net debt to EBITDA to remain quite robust, would not change significantly from the current level.
Thank you, sir. Congratulations and all the best.
Yeah, there's also some capex which is happening in the Wrigley business. But in spite of all this, the debt EBITDA ratios are expected to stay well in control.
Superb, sir. Thank you.
Thank you. The next question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Yeah, good afternoon, gentlemen. Thanks for the opportunity. Sir, congratulations on good numbers. So my question was regarding rationale behind our optimism on specialized BOPET line, where we are putting a large capex, and the way you have been citing the future. Can you elaborate on that? What is the specialty side of that BOPET, where we are a new entrant, and what is the technology, and what else we need to understand on that side?
Well, very frankly, while we may not be able to talk much about the technology at this stage, but broadly what we are targeting is the specialized product in the BOPET line. And that too, to a large extent, some of these will substitute the imports happening in India. Having said so, it will also substitute some of the captive consumption, because earlier we were buying some BOPET, films from outside, which it will substitute. I think that should answer your question.
Yeah, but we understood that. But since we are the new entrant and we see this type of business first time in India, I suppose. Correct me if I'm wrong. So, what was the lagging behind previously, and what is the changing new things which is helping us to enter a big way into that business?
See, many of these segments are similar to BOPP, and given that Cosmo is in top 3 in many specialty segments worldwide, we'll be able to take benefit of getting into these segments faster. The only effort that we were supposed to do is to work on the machine design, which we worked along with the machine supplier for a good period of 1 year. And second is to also work on the product recipes, which we have been working for last 2.5 years, and will continue to work for another 2-3 years to make sure that we supply the right products to the market. And obviously we have enlarged our research team. We have hired some consultants to make sure that we are able to bring these innovative solutions to the market.
In our slide number 9, where you mentioned about partnering with some of the best global brands to offer structural rationalization, will it be possible to elaborate on that, sir?
Yes, we are working with some of the largest FMCG players in packaging to help them with the recyclable packaging. That has been the focus, and just to let you know that a lot of large brands have made commitments to their stakeholders that they will shift to recyclable packaging either by 2025 or by 2030. So, what it basically means is that a very large chunk of the packaging has to move into recyclable packaging over the coming years. And Cosmo has been always at the forefront in providing these innovative solutions. The market is obviously very, very large, and therefore these FMCG players are looking at very select players in the world who have the research capability to help them with these solutions. We were the first ones to come up with heat-resistant films in the world. We were the first ones to come up with ultra-high barrier films in the world, and therefore we are able to offer such solutions to the customer. There are a lot of other solutions where we were the first in the world, and we are providing those solutions to our customers to make recyclable packaging.
It's really helpful, sir. Thank you very much, and wish you good luck to you, sir.
Thank you. The next question is from the line of Abhishek Maheshwari from Skybridge Wealth Management. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Sir, I've got a couple of questions. My first question is regarding your specialty films that you will produce under PLI. So, sir, you'll be setting up a new facility for this, or it's a brownfield expansion?
So we'll set a new capacity actually in Maharashtra.
And sir, are these completely new films that you'll be producing, or a ramp up of capacities of existing ones?
So it will be a different kind of the film actually. So, but it will be at the same place within the same plant.
So see, to begin with, the film will be largely imported. However, we are putting the value add facility to begin with to provide to the electronic industry. As we learn more about this industry, we will be then evaluating whether we should put larger capex on this. Having said that, to begin with, it's a value addition that we are going to do in Cosmo at Maharashtra and entering a new segment of customers.
Okay, thank you, sir. Sir, and my second question is regarding your adhesive products which you're planning to introduce. Sir, are these your adhesive tape films only, or are you planning to introduce some Fevicol or glue sort of products also? Yeah.
So we are entering B2B segments. There are 5 big segments that we are going to enter. 3 segments are related to our current business, which is packaging, lamination, and labels. These are very large markets, and some of these segments are very niche, where very few players are there in India or the worldwide. So these are 3 segments, and then barring 2, there are 2 more adhesives. One is for automotive industry that we are planning to come, and second is for electronic industry. So there are 5 B2B solutions that we are going to come up in the phase 1. Obviously, as we start, getting larger, we'll certainly evaluate other segments, because as we understand, adhesive itself is a very large industry, and we are making a humble beginning in the coming quarter.
Okay, so no brand creation here, only B2B for now. Right?
In the phase 1, yes, it will be largely a B2B, but in the B2B itself, you can create brands. So I will not say we are not going to create brand. We will create a B2B brand. We'll create a niche space for Cosmo. And having said that, we'll evaluate as the progress happens.
Okay. Thank you, sir. And sir, my next question is regarding your chemicals business. So, sir, a lot of textile chemicals that you have launched, they're in pilot stages, right? So, how much capex do you think you will need to spend to take these capacities to commercial scale production? Or do you already have these capacities?
So as far as textile chemicals is concerned, we had put up our plant in September. We had started our pilot facility in February, March. So from February, March till September, we kept on doing trials with various customers. And the good part is that the moment we were able to start our facility, we have started gaining customers. So till now, we have already within last 4 months, 3.5 months of startup, we've already now commercially invoiced to 40 plus customers, and we have launched 40 plus products. This is a very specialty segment where you have to keep evolving a lot of new solutions, keep improving your solutions. Some of the larger players in the industry, they have close to 300 to 400 products when it comes to textile chemicals. But within the first year, we have already made a good progress by launching 40 plus chemicals. And next year again, our effort will be to launch another, say 30, 40 more chemicals. Having said that, we are also innovating some very unique solutions for our customers, which we have identified as unmet needs. I cannot share too much details at this stage. And as and when we will launch this product, we'll let our investors know in terms of what is so unique about such products. But good part is that month on month, we are scaling up our textile chemical business. Hello?
Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Pankaj ji, again, thank you very much for nice results you are giving. Sir, can you give buyback instead of dividend?
See, this is a subject beyond myself, to be honest. This is to be decided by the chairman and the board of directors.
Right.
this is something which, they keep evaluating. One thing I can tell you for sure, that our entire board and chairman is very sensitive towards making sure that, the shareholders are rewarded handsomely.
Yeah.
And, we will certainly pass your message to them. And well, and we will continue to do that.
Because buyback is always beneficial for our company in long run. Dividend, once you paid and investor forget about that and no benefit will derive to company in future. So that is my request. Second, any such business like animal care in your mind which may start in next 6 months or 1 year?
We have already started Ziggly, which is for pet care. So I'm really not sure what extra you intend to.
I mean to say, other than animal care, is any business in your mind we can start in umbrella of Cosmo Film? That is my point.
See, as and when something we decide, we obviously share it with our investors.
Right.
As of now, we intend to consolidate and build up our chemical business as well as Ziggly business. And obviously, needless to say that our film business too.
And the last point, sir, how much top line growth we may expect in next 3 to 5 years in the company? I do not want any future guidance, but top line, if you can give.
Post our BOPP line stabilization, we feel that we will be close to 5,000 crore company. So you can assume that the BOPP line will come in close to 3 years from now, and a year thereafter we will be close to 5,000 crore company.
Okay. Thank you. Thank you. All the best, sir.
Thank you. The next question is from the line of Manan Shah from Moneybee Securities. Please go ahead.
Yeah, hi sir. Congratulations for the good set of numbers and thank you for the opportunity. In earlier calls, you've indicated that the specialty margins are in the range of 50 to 60 rupees. And now with the commodity margins nearing 42 rupees, do the specialty margins of 50 to 60 still hold or they are higher now?
Yes, so to be honest, specialty margins do not change upwards or downwards
because
they're raw material. And, to be honest, last quarter, the commodity margins as a percentage to sales, semi-specialty margins and specialty margins were all hovering at a very similar number.
Okay.
As a percentage to sales. The sales price for specialty was obviously much higher than commodity price. But percentage margins were very similar because commodity margins itself right now are at a very good level.
Okay. And our target of 80% of revenue in terms of specialty, this would be in terms of revenue. So what would be our volume targets for the same?
Yeah, volume targets is difficult to give. Neither we shared in the past, and we have to understand that companies entering newer businesses.
Right.
If you are asking for the specialty, then as we have said earlier, within next 15 months, we are targeting to have 80% of our volumes coming from specialty.
You mean volumes or revenue? That's where I'm getting confused.
As far as revenue is concerned, we are hovering between 75 to 80%.
Okay, got it. My next question is on our targets about specialty chemicals and master batches contributing both 10% of the revenue. Would we need to do any further capex to achieve these goals, or or the present capacities would suffice?
The beauty about chemical businesses, it's more about innovation than capex. But yes, you are right. We will have to invest another 50-60 crores in business over a period of time. But it is not going to significant asset.
Okay. Another question I had was, I believe for our capexes in Aurangabad, we are entitled to some tax benefits. So if you can just highlight what are they and when should we expect them to start flowing in?
They will start to come once the polyester line is commissioned. And we have put up our investment application under MEGA scheme. Where if we, certain amount, we'll get the entire investment back over a period of 20 years.
Okay, so these should start once the polyester line commences.
That's right.
Okay. And lastly, on the our animal pet care business, so wanted to understand on our online side, would this be more of a marketplace, or would we be stocking the inventory that we are going to sell over here? And our priority is going to be whether on scaling on this online first, and then through the data that we gain, use that data to increase our offline presence in the target cities, or if you can just highlight a little bit on that side as well. Thank you.
So there are two things. As far as the products are concerned, we will have a model of stock and sell. But when it comes to services online, we are going to follow a marketplace model. And we are one of those companies which are doing omni-channel growth at the same time. So we are going to scale up both online as well as offline at the same time. So from a revenue perspective, we are going to be online, we are going to be on our experience centers, and we will also evaluate whether we should scale up our van business, because we've also taken one van to begin with. We're doing a pilot launch with the first van. And if we find that we are able to do the van also simultaneously, then we'll be scaling up van. That is yet to be concluded. But as far as the experience centers are concerned and the online business is concerned, we are already in a phase of scaling up because the pilot launch has been very successful.
Okay, just to follow up on that, you said that for the service will be a marketplace. So you mean to say that the existing pet stores that are there, they will be listing their services on our platform and we'll be generating leads for them. Is that understanding right?
Not really. We are going to let's say follow kind of a urban clap model.
Okay.
So standalone trainers and groomers.
Okay.
And the booking can be done only through our app.
Okay, got it.
Pet parents can book the services of a groomer or a trainer on our app, and these are certified Ziggly trainers who have gone through rigorous training and a standardized method of training. And they will then visit the pet parent and take these services. If any of you are from Delhi, you can already start using these services at your residence, and you can very well feel the difference in terms of how professionally we have done this. Till now, all our customers have given us 5 on 5 rating. There are more than few thousand customers who have already tried us, and all of them have been giving 5 on 5 rating to Ziggly.
Okay. And lastly, you mentioned in your presentation that you plan to demerge this business in the medium term. So are we looking at any fundraising in the near term for this business so that we can, accelerate the pace of our growth?
So that is something that is continuously evaluated. At the right time, we'll certainly evaluate it and see whether we need to, take investment from outside. But more than investment, we have to also understand that some of these key investors, they bring in a lot of wealth of knowledge. They are able to bring the best of the practices all over the world. So more than investment, we would like to have the right partner at the right time who can share the best practices, who can help us grow faster, and so on and so forth.
Okay, thank you. That will be all from my side.
Thank you. The next question is from the line of Nikhil Chandak from GM Financial. Please go ahead.
Yeah, Mr. Pankaj, my first question was, is the company over diversifying? What I'm just thinking is from a films company to, chemicals and textile chemicals and now to a pets business. Now, there's no correlation beyond the limit between the three businesses. So first is the company diversifying far too much into varied segments? And, the second one was today almost 100% revenue is from specialty films or from the film segment. But if you take a 3-year view, what could be the segmental breakup across the three businesses, which is films, chemicals, and, pet care from a top line and EBITDA perspective? Just rough cut sense, just to figure out 3 years out, what is the composition of the P&L basically?
So to be honest, we intend to be a large Indian conglomerate. And we realized that just being in films, it may not be possible, and therefore we decided to diversify. all our diversifications definitely are not unrelated. Some are related and some are unrelated. So adhesives and master batches are related to us, while being into Ziggly business and textile chemicals to some extent are unrelated. Having said that, you asked me in terms of revenue composition. We have to understand that film itself will become close to 4.5 to 5,000 crore business in 3 years from now. And therefore, chemical, we'll have to literally see chemical maybe perhaps anywhere between 10 to 15% is what we'll intend to achieve by then. Ziggly being a consumer business, it will be lesser than 10% in 3 years, but we definitely intend to grow both the businesses at a fast pace.
Understood. And, one more follow-up on the Ziggly business. I didn't follow why would you not do a marketplace model for the, for the inventory, as in, why would you have inventory on your books and take the inventory risk, and why not do a marketplace model? That is one. And second, when you, like, just a simple Google online, you do for pet food and, stuff like that, there are several players already which are there. So there are, at least 5-6 options which come up. Plus you have Amazon and Flipkart, which one has an option always to go for these products. So, just from a potential perspective, I understand it's a small segment, it is growing very fast in India, but is there already enough competition in this segment from existing online players?
So I think partially you answered your question yourself. First of all, this market is already close to 6,000 crores, and there's hardly any large player in this segment. All the players that are there are unorganized until now. There's only one company which has already been valued at 750 crores, while as per the unofficial sources, their turnover was still less than 100 crores. So you can understand the kind of interest which P segment is having in this sector. There are a couple of other very, very small players who have already got few $1 million of investment from the P funds. This segment is expected to cross 10,000 crores within next 3 to 4 years. Now, to answer your question, why are we not selecting a marketplace model for products? See, marketplace model is already there with Amazon and Flipkart, as you yourself said. We are right now trying to create a niche for ourselves where, we will be doing both online and offline, create a very large sales, start commanding the purchase power with the suppliers, and also create a brand name for ourselves. At the right time, in the right segments, we might also see whether we need to build our own brands, but it's too early to comment anything on that side. Our initial focus is to start scaling up both our online presence and our experience centers. And we want to give a very, very differentiated, unique experience to our customers, which we have already started proving in the initial pilot scale startup that we have done. And I can very clearly tell the investors that this will be already the fastest growing first year growth for any new business who has got into pet care.
Wow, that's interesting. Understood. And in terms of the capex which you do, I saw in the presentation you put up figure of 15 crores. But would that be the only number you think the investment in this business kind of grows up for the pet business?
This is only the first estimate that we had made earlier for the next year.
Right.
Given our success, we are evaluating whether we should scale up faster. But even if this changes, it is not going to change from 15 to say 100 crores. It can change from 15 to 25 crores because we are largely operating on a lease model where all the new experience centers are on lease. So our investment is limited to the leasehold improvements that we do in any new site. As far as online is concerned, we have already built up our, again on a lease model, built up our warehouse, set up the supply chain, has already started our website. So majority of the investments on the online, I would say 40-50% of investments have already happened. So majority of our new investments will largely be happening on the scale up of experience centers.
Okay. Perfect. Perfect. Thank you so much. That's it from my side, and all the best. Thank you.
Thank you. The next question is from the line of Avinash Nahata from Paramik Financial. Please go ahead. As the participant left the queue, we'll move to the next question, which is from the line of Anil Vipul Shah from Sumangal Investment. Please go ahead.
Hi, sir. Congratulations for very good set of numbers. I have few questions. So, sir, I'm little confused. So, what is the difference between your BOPET and BOPP films? So why we are undertaking this BOPET expansion? So, is it to cater to any particular industry?
As we said, I mean, BOPET is very complementary product with the BOPP. So, while for the specialized BOPET line, we are looking for very specific kind of a specialized products, but it will happen over a period of time. So, in the initial stage, we'll make BOPET film also, and we'll make a specialized product also. You see, I mean, this will also enhance Cosmo's capability to cater to customer portfolio in a complete way.
No, still not understood. So, is this for a particular set of industry or customers, this BOPET line?
The BOPET line will give us opportunity to complete our product basket with respect to most of the FMCG players. Because when you pack a food, let us say, you need BOPP film also, you need BOPET film also for a specific properties purpose. Like the BOPP is an excellent moisture barrier, BOPET is an excellent oxygen barrier. So to complete the product basket with the FMCG player, you need the both.
So what is the capacity of this BOPET line? And capex is around 400 crores, if I remember correctly.
Including some value-add assets which we are looking to, enhance some of the capability with respect to coming out with a specialized product on the BOPET line. Including that capex, it's about 400 CR. It should produce close to 25,000 metric ton annually.
Okay. And sir, can you share the financials of master batch business till date, if it is possible? Means what is the top line and what is the EBITDA contribution?
So master batch business we are doing in a 100% subsidiary. In any case, at the end of separate results will be available on the company's website. But very broadly, we have done 60 crore rupee of sale for the CSC, which is our 100% subsidiary till date.
For 9 months?
Yeah.
And what should be the EBITDA in terms of percentage, sir?
You see, it is first year of operation, but we are EBITDA positive.
EBITDA positive. And sir, lastly, this lamination, label and industrial films, they fall under specialty category, and packaging films are commodity films. Is that understanding correct?
Not all of them. So for a detailed, overview, you can look at our presentation, investors presentation.
I went through it, but I could not understand. That's why I asked you, sir. Yeah.
Color classification on one of the slides in the investors presentation, which category-wise indicate what is specialty and what is non-specialty.
Okay. Okay. Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Anil Nahata, an individual investor. Please go ahead.
Yeah, good afternoon. My question, the first question is on the area of the specialty chemicals. Just like you said right now that we are at a 60 crore run rate for the first 9 months. So assuming a 100 crore kind of a ballpark figure for this financial year, and taking cue from that we want to grow it to 10 to 15% of our business over the next 3 to 4 years. So basically that means a ramp up to 500 to 700 crores depending on what is the 3 to 4 year revenue from now onwards. So what kind of a capex we see happening and what kind of ramp up we see happening year on year to reach that 500, 600 crore in our this specialty chemical, including master batches?
So as we just discussed, actually it's not a capex centric business. The asset turnover in this business is very good. So we believe we may need another 50 to 60 crore rupees to be spent on capex in next 3 years.
Okay. And that will help us to reach all the way to 500, 600 crore kind of turnover on this segment.
Yeah, close to 400 to 500. Yeah.
Okay. So my next question is on the specialty composition for our films business. On the presentation for the last quarter, we are maintaining a single digit figure of 62%. Each quarter, we are seeing the same number happening as a percentage. I mean, is it really a 62% that is happening, or it is a range? I mean, I'm not able to get an understanding because for the last 4 quarters, we are giving the same number.
So you must have noticed that, this specific number is for FY21. So since we are updating this number on annual basis, this is why you will have latest number at the end of this year. But to answer your question, we are growing close to 20% year on year for more than 3 years now. Current year YTD growth is in fact more than 20% compared to last year.
So, I mean, can you give a ballpark idea where the 62% would now be, assuming that was Q4 when you first reported it, and FY21? So 3 quarters have passed. It is in the 66 range, 69 range. I mean, I don't know, just a ballpark idea.
For the current year, it should be close to 65%. This we intend to increase to 80% in volume terms by the end of FY22.
Okay. Thank you so much.
Thank you. The next question is from the line of Manan Shah from Moneybee Securities. Please go ahead.
Yeah, hi. Thanks for the follow-up. I just had a question on how the company goes about its R&D research and narrowing down on which product, mainly in the chemicals and the specialty chemicals. I mean, do we first identify a problem and then try and find a solution for that, or do we get some lead from a customer or something that they are facing this particular problem and then we try and find a solution? If you can just throw some light on how we go about our research in developing new products. Thank you.
Yeah, so we actually did a market research to begin with to understand the entire market. And then we identified certain segments where we saw that there is more growth, and at the same time customers have a lot of unmet needs. So initial work happened around that, and obviously during that phase a lot of customers interviews were also taken to understand the market better. Now as we have our own set of R&D team and sales team, as we go to different customers, our first question always to them is what are their unmet needs, and we try to see whether is this large enough for us to do research upon. So wherever we find that there is any attractive product, we try and make that. Having said that, textile chemical is one area where we have to make a bouquet of products to the customer. So let's say if we intend to get into cotton, and cotton itself has many sub-segments, we have to understand that what is the entire bouquet of products to be on cotton side. So to begin with, majority of the products that we initially produced were on cotton side. Now we've started moving on the polyester side. So one of the critical things that initially when we did the research was coming out clearly is that this industry consumes a lot of power and water, and therefore our initial research efforts were how can we reduce their power consumption and water consumption, and we came out with a lot of innovative products which help them doing so. So to answer, majority of the things that we are trying to do is to meet the unmet needs of our consumer.
Okay. So just based on this answer, so in that case, we would already have a ready-made customer available for these products, right? So when can we start seeing these products scaling up?
Yeah, so see, we started production in September, and already within a quarter, we have 40 plus customers to whom we have done commercial sales, and we have already launched 40 products.
Okay. And what would be then opportunity size then in terms of these products that we've developed? If any ballpark number if you can give.
See, the Indian textile chemical market is more than 10,000 crores.
Right.
Very large part of this is currently serviced by multinational players, while there are a lot of small players, especially in Gujarat, who are also being part of this market. We feel that we will be within top 5 players in this segment within first 3 to 5 years.
Okay. So our 40 products would also have an opportunity size of this 10,000 crore, or this is just the entire textile chemical market that you're talking about?
That is the entire textile chemical market of 10,000 crores.
So
obviously much
yeah.
smaller.
Okay.
Because nylon, there is rayon, there is silk, there is wool, there is cotton, there is polyester. So many different substrates are there. And again, for different substrates, there are different sub-processes. So for each type of, there are different types of printing methods, there are different type of dyeing methods, and therefore the chemicals keep differentiating for each one of them. And within every process itself, there are 10 to 12 chemicals being used. And therefore, the number of chemicals being used for this industry are close to 400 to 500, and they continue to evolve because every company, or let's say the good players, continue to research in terms of providing better solutions to the customers.
Okay. So then going by that, then these products would be very niche, right? So the opportunity size over here would not be that big. Is that the fair understanding, or?
Yeah, these are specialty segments. So you are right. See, within this 10,000 crores, let's say a large chunk is coming from dyes, and we haven't entered into the dye segment. So if we take only non-dye segment, that would not be more than, let's say, 4,000, 5,000 crores. And within that, yes, cotton chemicals maybe, let's say, 1,500 crores, polyester chemical maybe 1,000 crores, so on and so forth. So to begin with, this 40 chemical segment is niche, and market for them, I do not have an estimate, to be honest, but it will be few hundred crores only.
Okay, thank you. That was really helpful.
Thank you. The next question is from the line of Avinash Nahata from Parami Capital Financial. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
Yes, you are.
Okay, my first question is regarding spreads and margins. So it's a very pointed question. Let's say over the trough cycle and peak cycles, what has been, if I were to say that there are only 2 grades of films, one is the basic grade and one is the specialty grade, hypothetically, you might have a lot of grades. So what has been the lowest spreads or lowest margin per ton, and what has been the highest? So this is just to have a sense and build our profit forecast. And second question is, as far as supply side dynamics are considered, in the current context, what is China's role which leads to contraction and expansion of these spreads? Thank you.
So, see, the specialty segments typically on an average, they're around 50-60 rupees a kg, while the commodity segments hover between 10 to 25-30 rupees, while in last few quarters we have seen this going even to 40 rupees per kg. Okay?
So you're saying the range is 10 and 40. I mean, just if I were to ask you last 2 cycles range for a commodity grade film conversion between 10 and 40, it went as low as 10 and as high as 40. Is that a correct understanding?
Historically, we were always used to say 10 to 30 to 33, but this time it has gone to 40.
Fair.
And on an average, we always used to say that they are around 25 rupees.
Okay. And specialty?
Specialty on an average remains around 50 to 60 rupees. As we see, given that we continue to launch more sophisticated products, this number is also going up by, I would say, 3 to 4 rupees every year.
So this is irrespective of the price of the basic film or the polypropylene price?
This we are saying over and above all the variable cost.
Okay. Understood. And your comments on the China's role which leads to this contraction and expansion?
China doesn't affect in the Indian market because there is a 10% custom duty and therefore China doesn't export anything to India when it comes to films. In the international market, they are largely there in some commodity segments. Like tape is one segment where China is very strong. But again, we see that China is largely producing for their own consumption than to export as much.
Okay. So right now, what is the kind of films which gets imported into our country? Not necessarily from China.
Very little.
Very little.
Very little. Whatever films India is not yet able to produce, only those films are imported into the country.
Okay. Okay. I have not seen the slide. Small question regarding classification and declassification of specialty. So what is the basis, if you can just explain me in next 30 seconds? That's all from my side.
So specialty, anything where there is not a presence of more than 3 to 4 suppliers worldwide, and where the minimum contribution that we expect is 50 rupees per kg.
Okay.
And semi-specialty is anything where again it is partially linked to commodity, but again the margins always stay above 30 rupees per kg.
Understood. Thanks a lot.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Well, thank you. I think to summarize, companies taking all steps required to transform into a specialty packaging and specialty chemical company with B2B and B2C segment in coming years. Specialized polyester line and new BOPP line to be commissioned in FY23 and 25 respectively. Focus on our growing specialty sale. Diversification into specialty chemical and pet care would drive the growth in the coming years. The company's focus shall continue on improving specialty films and sustainability, which would yield results in the coming years. These actions would continue to improve margins and would contribute in the long-term sustainable growth. In the last, just repeating the precautionary statement, certain statements in the Concall may be forward-looking statements. These statements are based on management's current expectation and are subject to uncertainty and changes in circumstances. These statements are not guarantees of the future results. Thank you very much. Thank you for your time.
Thank you. On behalf of Essential Technologies, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.